mentions the terminology and then you can explain it while you waiting for the PPT. Or let's say you can give me the PPT and then I will try to share your slide or even your friends. That's up to you. But you can discussing the terminology that you wanna explain. I think we can all hear your voice, so do not worry.
Okay, so there is types of accounting ratios that we learned from the video. The first is profitability ratios, is uh, ratios measure the operating efficiency of the firm and its ability to ensure it create returns to its shareholder. The second is liquidity ratios. Its ratios analyze the short-term financial positive of a firm and indicate the ability of the firm to meet its short-term commitments out of its short-term resource. And the third is leverage ratios. Its ratios indicate the long-term solvency of a firm and indicate the ability of the firm to meet its long-term commitment with respect to. And the last is activity ratios. Is ratios are all called efficiency ratios or assets or asset. I mean, sorry, utilization ratios or turnover ratio. And Rita will explain more.
Okay. So profitability ratios, the ratios. Oh, ratio on investment ratio, ROI. This meaning is a term used to discuss the ability of an investment made to generate income for a business. ROI is the most common measure of financial performance for a business. The formula is a net profit per cost of investment uh, um, uh, times times 10 times 100. Price earning ratio is the relationship between a company share price and earning per share or EPS. The formula is share price per over earnings per share. And the quick ratio indicates a company's capacity to pay its current liabilities without needing to sell its inventory or get more money or financing. The formula is quick asset over current liabilities. Current ratio is used to measure the company's ability to pay its debt over the short term. The formula is current asset over current liabilities. And the next is return on equity, ROI. The ROI signifies how good the company is in generating returns on the investment in from its shareholders. The formula profit over shareholders equity. And for the next is inventory turnover. Inventory turnover shows how many times a company has sold and replaced inventory during a given period The formula is cost of goods sold over average inventory. And the next is debt to equity ratio. To debt to equity ratio shows the percentage of company financing that comes from creditors and investors. The formula is total debt over shareholders equity. And for the next is the average interest rate is the percentage of principal charged by the lender for the use of its money. The average interest, the rate at which a company borrows funds. The formula is interest expense minus account payable over liabilities. And next is net profit margin. The percentage of revenue left after all expense have been deducted from sales. The formula is net income over sales. The last is account receivable days. Help you work out the number of days that a customer invoice is outstanding before it is collected. The formula is account receivable over revenue times 365.
So that's all that we learned from the video. We apologize if there is any mistake. Thank you.
Okay. Thank you, Group 2. Any closing statement, Group 2, based on your group's discussions regarding the ratios that you found out interesting or even the complicated one? Perhaps there is some interesting discussions that happen between all of you in the Group 2, or nothing interesting?
Mm. Actually, sir, we are very sorry because we haven't prepared it so well. Because we have a lot of assignments.
You need to be confident then. You don't need to show your weaknesses because I'm the assessor. Yeah. If you show your weaknesses, then I found out. I think, I mean, I'm not asking you to be a lie, to become a liar, but you need to show your confidence, at least to show the best, let's say, best performance, because I mean, I do not know all the things that you prepare. So just being confident, being the best that you found. So again, in the following presentations, yeah, I know I do appreciate what you all did, the Group 1 and also Group 2, but again, in the futures, we need to be confident, yeah, because you need to be learn, yeah, how to become a, let's say, yeah, to become a good presenters day by day. Even me, I'm still learning, but at least you need to be confident, yeah, from the weaknesses, from the lesson, the advices from the lecturers, or advices from your friends, or even from the another assessor. So when you have a competitions, or let's say another thing that you found out in the out of your academic field, yeah, let's say you asked to be become someone to need to be present about yeah, several things, then just being confident, yeah, but being confident, which means you need to also open to any point of improvement, so at the end you will be a better presenter, yeah. Okay, so have you read, class, the article, I mean, like some journal or articles? Not yet, like some international articles. Have you read? or at least?
Not yet, sir.
Oh, okay. So first I will show you the, wait for a moment. So this one. So I already add some PDF ya class, the common ratio and the frequently ratio. So you need you need to download, but you can also relearn those ratios again. It's basically the same with the things that we learn, but this is like the PDF, yeah. So you can memorize or even check your answers whether it's correct or wrong, yeah. It's quite huge, like I said before, yeah. It's a huge file, so you need to download it, and it takes a couple times, yeah, to download it. But and again, do not copy or distribute it, especially for the things that will be not related with our subject, yeah. So this is for you. I know this is for you, but again, do not copy or distribute it to anyone that doesn't relate to our subjects or even your academia things, yeah, class. Okay, do you get my point, class?
Okay, sir.
Yes, sir.
Okay, and I will show you the articles, yeah, some articles, because I think some of you perhaps like Martin wanna know like exactly what kind of ratios. Yeah, this is, I haven't checked all the contents within this article, but I found out this is like a good one. And hopefully this is like the real international article. Yeah. So can you see my screen, class?
Yes, sir.
Yeah, you see this one. The article is the topic is about the analysis financial performance of PT Astra International, TBK, which means this is like the public company, yeah, that already list in the bursa. How to say? I mean, like they already public their shares, yeah. And the time, the period of the time is before and after economic crisis in the 2020. Now, one thing to understand the article, you can see from the abstract first. So abstract means like a executive summary, yeah, blah 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 blah, and you can see, yeah. And again, they're using the financial performance, or we can specifically discuss about the financial ratio, and then we will see what are the financial ratios that they use. These researchers called Ovinda and Wiwik, yeah. Okay, we are moving on. You see, one of the things that we can know how they conduct their analysis, we can see from the chapter 3, or we can call the conceptual framework. Yeah, as you can see, they using all the ratios, right, class? All the ratio. If you can see the in the, can you see my pen, my red pen?
Yes, sir.
Oh, yes.
Yeah, you see.
Yes, sir.
So first they collect all the financial report, yeah, before the economic crisis. And again, we need to determine like the goal. So the goal of this research is to know the performance before and after. That's why they collect all the financial report before and after. And then they use the measurements of financial ratios that you already explains a bit, yeah. Because we, again, do not worry, we haven't stepped into these states, yeah. Yeah, you see, financial ratios, the liquidity, the solvency, and the profitability, and the activity ratios, until they got the hypothesis, yeah. And then this is they use the the ini ya, quantitative analysis. I think they use the SPSS, but do not worry, yeah, this is not the time. This is like a warming up. So at the end, yeah, in the futures, perhaps you're not really not really blind, yeah, or new toward this statement. Okay, we are moving on. You see, after they use, again, they explain more about the ratio, yeah, the liquidity ratio, what they're using, the liquidity ratio, the solvency, the profitability, until the activity. And then until we got they using these formulations, where is the result? Yeah. Blah, 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 blah. Yep, you can see. So significant means this financial ratios has a strong relations, yeah, toward financial performance. Yeah, there is a word of significant, and significant, and also the significant. But again, the thing that I wanted to show you is about they all using all the ratios, yeah. And this is the another article that not only using the financial ratio, but they using also the economic value, yeah. Allow me for seconds. Nah, this one about the Unilever company. So they, they, which means the researcher, yeah, the FV, the Mr. Agus, and also Mr. Joko, and the last is the Mrs. Damarsari. They use the analysis of financial performance based on financial ratios and economic value added. So they using more measurements. So they do not solemnly based on the financial ratios. Okay, moving on. What is the result? Yeah, you see, again, they're using the qualitative, quantitative using the SPSS. Yeah, they not only using the financial ratio, but they also using the AVA. In AVA, it means this one, economic value added. So again, when we talk about performance or even ratios, we need to really share, yeah, who is the like the eligible researchers or the profound persons that stated these things. We cannot be subjective, yeah, using some ratios. Yeah. But again, in the aspect of personal, you can use your own, let's say, own knowledge. But again, when we talk about the research or academia things, we cannot solemnly say using only this ratio to know the financial performance. Yeah. Do you get my point, class? I hope and I wish. Okay, that's all for today's presentations, and please be prepared.